Hey everyone, welcome back. Hope everyone's doing well and had a good trading day today. This video is a quick recap of Nifty 50's price action today. We'll discuss the 5-minute chart one bar at a time, and we will later discuss what we expect from tomorrow. So, an interesting day today. Yesterday we had a big gap up and a very strong small pullback bull trend. And today we have a bear trend, which almost reversed yesterday's rally. Why did this happen? If you look at the daily chart here, the market was in a spike and a channel bear trend. Usually, once the market breaks out above the bear channel, it usually approaches the start of the bear channel. The market broke out above the bear channel on 17th of April. So it was expected that the market will test the start of the bear channel, which is the 5th of December high, 24,857. And market did that yesterday itself. The test of the high does not mean that there will be an exact test. It can either be a lower high test or a higher high test. It is very rare to have an exact test. Here we have a higher high test and a strong bear reversal bar. Also, if you look, we have been rallying for almost 20 bars here, and this is the biggest bar in past so many bars. What does this tell you? Is this a measuring gap or is this an exhaustion gap? The biggest bar after more than 20 bars into a bull trend is more likely an exhaustion gap. Also, the market was in a tight trading range for almost 10 to 12 days here. Tight trading range late into a trend usually signals a final flag reversal. If there is a bull breakout after a tight trading range late into a trend, it usually reverses within a couple of bars. And that is what caused here. The market reversed in just one bar here. So, an obvious resistance, the bear channel sought an exhaustive buy climax, as well as the final flag reversal. All of that caused a big bear reversal day today. If you look at the hourly time frame, we had also approached the measurement target. The market was in a tight trading range for a lot of bars here. However, on Monday, we had a strong bull bar breaking out above all of this trading range price action. It was possible that the market could have gone for a measure move all the way till here based on the height of this entire trading range. However, we have to start with the smallest breakout point here, the lowest breakout point, which is somewhere 24,450. So if you see the measure move target based on this height first, it comes to around 24,957, which is where we got yesterday. And today, as soon as we broke out of the previous day high, we found sellers. Had the market continued to keep going up, I would have used another measure move target based on this height or either this height. However, this was the first possible measure move target, and the market reversed right from there. So multiple reasons that today we found sellers instead of buying on open. Multiple reasons that the bulls did not get a follow through here, and instead we reversed down. Had we opened gap up, I would have expected another strong bull trend day. However, opening flat or a gap down made a sideways day more likely. Was I expecting a strong bear trend day today? No. After a strong buy climax day yesterday, there is only 10% chance of a very strong bear trend day. I was not expecting a strong bull trend day. I was not expecting a strong bear trend day. What I was expecting was today to be more likely sideways. And today was sideways. We had sharp reversals up and down. We broke out here. We have another trading range here after a trading range at the top. The market did close near the low, which makes this as a strong bear trend day on the daily chart. However, if you look at the 5-minute chart, the market was mostly sideways. Had a bear breakout midday, and then another tight trading range here. The market kept making lower highs and lower lows, and kept going down into a weak bear channel rather than a strong bear trend. Also, there was one interesting thing. If you look at all the previous days, for the past 6 to 7 days, the first bar remained as a high or low of the day. Let me take you before. Here, on 5th of May, Monday, first bar remained as a low of the day. First bar remained as a high of the day. Here, the first bar remained as a low of the day. Here, the first bar remained as a high of the day. Here, the first bar remained as a low of the day. And here again, this is the sixth day where the first bar remained as a low of the day. So today, I was not expecting the first bar to remain as a high or low of the day. Once we got this fair sell signal bar, I was expecting buyers somewhere here or near the bottom, reversing up above the first bar high and then going sideways near the high. However, I had to change my mind after we got this strong bear surprise on open. The first four bars of the day fell almost 300 points. This is a major bear surprise. And whenever this happens, there is only a 30% chance of a new high for the rest of the day. This sell-off usually dominates the rest of the day, and that is what happened today. After this sell-off, the market failed to get above any major lower high, and it kept channeling down for the rest of the day. Okay, so let's discuss one bar at a time. Let me get rid of this high. I marked the previous day high and the previous day low. So first bar of the day, we have a bear reversal bar. As soon as we went above the previous day high, we found sellers. However, there's a prominent tail at the bottom of the bar. And after a strong small pullback bull trend, I was expecting some follow through buying on the open. Also, I was expecting this bar, the high or low of this bar, to not remain as a high or low for the rest of the day. So I was expecting more likely buyers below the low of this bar. However, look at this. Bar 2, sharp reversal down. This is a bear surprise. I was not expecting this bar. I was more likely there should have been buyers below the low of this bar. However, this is a bear surprise. And we fell for almost 190 points here. Look at the size of this bar and the size of all the bars to the left. This is almost twice as big as the size of the bars to the left, which makes second leg down more likely than a reversal up. So more likely sell the close bear trend right now. Bears at the close of this bar as well as below the low of this bar. Weak follow through for the bears, but still a bear bar. More likely more down before a reversal up. So bar 4. This is interesting. Now we have a reversal bar with a big tail at the bottom of the bar. The bears got a big bear bar closing near its low on bar 2. However, they're failing to get good follow throughs here. Also, there is one more interesting thing. If you look at this entire rally from yesterday, we are right at the 50% pullback. There are always buyers at the 50% pullback buying on limit orders because there is 60% chance that before the market falls to the previous day low, it will usually test this high. And that is why there are always buyers at the limit order at 50% pullback. And that is what caused the sharp tail at the bottom of bar 4. The sell-off is weak. The bears, after getting this big bear bar closing near its low, are not able to get good follow-throughs, good bear bars closing near the lows, which makes me think the sellers will only sell after a rally. There are more likely buyers below here. However, can you buy above bar 4? No. This is reasonable to exit your shorts. However, it is not high enough probability for you to buy. This is a bear bar and it is coming after a strong spike down, a strong 4 bar bear micro channel. So I will wait for a second entry buy setup, more likely sellers above and buyers below. Sharp reversal up. However, we are now approaching the 50% pullback of this bear spike. So I expect more likely sellers here. We are at the 50% pullback of this bear spike. We are at EMA and we have reversed after a weak buy signal bar. The reversal up is usually going to be minor, and which makes me think there are more likely sellers either here near EMA or somewhere near the high of this bar 2. Straight away reverse down on bar 6. Bad follow through for the bulls. If the bulls wanted a strong bull trend day, a strong rally after the sell off on open, why did they not get a follow through after bar 5? Also, bears have been failing to get good follow throughs. After bar 2, they got a weak follow through here and a reversal bar here, which makes me think that the trading range is more likely here. A strong bear trend does not have this deep pullback. This deep pullback makes me think that either the bear trend is weak, either we will have a weak bear channel or we will have a trading range. So can I sell below bar 6? You can for a possible second leg down after such a strong bear surprise on open, it is likely that we will have a second leg down and there will be more likely buyers below bar 4. However, sell here only for a scalp and not for a swing. Bar 7, good follow through for the bears. However, bears need a breakout below bar 4 with a good follow through. There are more likely buyers below bar 4. Bar 8, we didn't even go below bar 4 and we found buyers. Double bottom with bar 4 low. Can you buy above bar 8 high? It is a low probability buy. After a bear surprise, a major bear surprise, either a bear trend or a trading range day is more likely. A bull trend is unlikely. And if this is a trading range, I want to buy below supports. Trading ranges usually fall below support before it finds buyers and usually goes above resistance before it finds sellers. This is a, yes, it is a double bottom. It is a high-low double bottom and has a good buy signal bar. But because a trading range day is more likely, I will prefer to buy below supports rather than buy on reversal up above support. I'm expecting more likely sellers somewhere near EMA and buyers below bar 4. Bar 9, we didn't trigger the buy signal here and we have a bear sell signal bar, a low and short. However, this is a possible trading range. We had a bear surprise, we had a deep pullback. We have good buy signal here, bull bar closing near its high. We have another bull bar closing near its high. And now we have a low and short near the bottom of this trading range. That is a bad short. A low and short near the bottom of the trading range is usually a losing strategy. I will sell if there is a low to short near EMF. However, I will prefer staying away from a low and short. I will sell only after a strong breakout below bar 4 with follow through. Bar 10, good follow through for the bears. However, we are yet to break out below the low of bar 4. More likely buyers below bar 4. The bears are failing to get below bar 4. And we have a sharp reversal here. However, if you look at all the bars to the left, we have been getting bear bars closing near the lows, but bad follow through. We got a bear bar closing near its low and here, but we failed to break out below here. We got two consecutive bear bars closing on its low, but again failed to break out here. All of this are turning into bear trap. Also, the same is the case with the bull bars. Bull bar closing near its high, we found sellers. Bull bar closing near its high, we found sellers. What do you think is more likely here? Do you expect a good follow through after this bar? No. There are more likely sellers somewhere near EMS, somewhere near this high, somewhere on the close of this bar, rather than buyers. So I'm only looking to sell. I will sell if there is a low to short right near EMA. That will be a reasonable swing shot for a possible breakout below and a measure move down. Bar 12, bad follow through for the bears, but a weak sell signal bar for the bad follow through for the bulls, but a weak sell signal bar for the bears. This is a low to short, but a weak sell signal bar, only a bear doji and a big tail at the bottom of the bar. I will wait for a good sell signal bar here. There are more likely buyers below and sellers above. As soon as we went above the bar 12 high, we found sellers, and this is a very strong sell signal bar. It is also a low to short with bar 8 high, and it is also a possible wedge with bar 8, bar 12, and now bar 13. Let me draw it for you. We have been making lower highs. The bulls are getting bull bars, but are failing to break out above EMA. The bears are getting bear bars, but are failing to break out below the lows and get consecutive bear bars closing near the lows with good follow throughs. All of this makes trading range more likely. Yes, it is a reasonable swing shot. However, if you do get bad follow throughs here, you have to scalp out of your shorts. So reasonable sell below bar 13 for a possible break below bar 4 and a measure move down. Possible lower high double top with bar 5 high and a measure move down somewhere to 25,500 area. Look at the follow through here. Weak entry bar for the bears. Bears need strong follow through here or else this will turn into a trading range. And they did on bar 15. Strong breakout below bar 4 low. A breakout below the double top neckline here. Or the bears need a follow through here. The bulls had a double bottom here. Had a double bottom pullback and a reversal up. However, they failed to break out above the double bottom neckline and we instead of a breakout below. If the bears do get a follow through here, it will possibly fall for a measure move down. What do you think is likely? Look at all the bars to the left. We have been getting a lot of bull bars here, closing near the highs. There have been good buying pressure since the start of the sell-off here, which makes me think that the bear breakout here is most likely going to fail. If we have another bull bar closing near its high, that will clearly disappoint the bulls, clearly disappoint the bears, and we might have a reversal up. The bulls need another bull bar closing near its high for a possible swing long. The bears need another bear bar, a good strong follow through below bar 15 low for a sell off all the way to the measure move down. Look at the follow through here. Bad follow through for the bears. This bar 16 high also closed the gap with bar 4 low. The bears are failing to get good follow throughs. The gaps are closing. We have multiple bull bars closing near the highs. All of this makes me think that either the market is in a weak bear channel or the market is in a trading range. And in both the cases, I want to buy low and sell high. This is low. So I'm looking to buy low here. But this is a weak buy signal bar. I will more likely buy above a bull bar closing near its high, which I did get on bar 17. Bull bar closing near its high, and we have now four bull bars closing near the high and this sell off here. Yes, the market sold off for almost 320 points here. However, look at all the bars to the left. There are a lot of buyers who are stuck. Buyers on bar 5, buyers on bar 8, buyers on bar 11. And the rally will more likely go back to the original prices. So let them exit at break even. So this is a reasonable swing long above bar 6, bar 17 high. The bulls will at least attempt to break above bar 13 high and stop this bear channel here. The market has been making lower highs here. So if the market wants to convert into a trading range, it will more likely go above this high before it finds sellers, which we did. If we have 7 consecutive bull bars here. However, it is possible that we might continue this rally all the way up to the bar 1 high, all the way up to the day high. The bulls broke out above the bar 13 swing high here. The bulls probably needed just one more bull bar here to flip the market to clearly into a bull trend here. We have 7 consecutive bull bars. So there will more likely be buys below the low of any of these bars at the 50% pullback somewhere near EMA. But if you look at all the bars to the left, we are also in a trading range here. We are getting bear bars closing near the lows. We are getting bull bars closing near the highs. We broke below the low here. We broke below bar 4 low on bar 15 and we found buyers. The breakout failed. And now we are breaking out above bar 13 high. What do you think is more likely? More likely we will find sellers there. And the breakout is going to fail. The bulls probably needed one more bull bar here to flip the market into a strong bull trend. However, they failed to do that, which makes me think that this entire rally here was more likely a bull trap, was more likely a bull leg in a trading range rather than a strong bull trend. However, can you sell below bar 23 low? Bar 22 is a lower at double top with bar 5 high, and we have a bear bar closing near its low on bar 23. Can you sell below the low of that for a possible measure move down below this double top? Possible break below the neckline of the double top and a fall all the way to 24,428. Can you do that? Look at the rally here. We had 7 consecutive bull bars here. So any reversal down here will more likely be minor. And there will be bias below the low of this bar or around the 50% pullback of this. This is clearly a trading range. And if this is a trading range, you should always look for 2 legs up to sell and 2 legs down to buy. We had a strong leg down here, a pullback, a break below this leg, and we found buyers here. So First leg pullback and second leg here, and we found buyers. We have a strong leg up here. Wait for a second leg up before you look to sell. More likely buyers below the low of bar 23, and we did find buyers there. This is a second leg up after this bull rally, and this is a strong bullback closing near the high of this entire trading range. What do you think is more likely? There will more likely be sellers on the close of this bar as well as near the high. Like I said, look to sell after a second leg up. So I'm more likely looking to sell. This is clearly a trading range now. In a trading range, I'm looking to buy low and sell high. And I'm looking to sell high after two legs up, and I'm looking to buy low after two legs down. This is the first leg up pullback, and now we are going up for the second leg. So I'm more likely looking to sell here. Bar 26, reasonable short below bar 26 here. We went for two legs up. I'm looking to sell here for a possible two legs down, and then we'll scalp out of my shorts. However, we didn't trigger the sell signal here. We went up further. However, there are more likely sellers on the close of R27 than buyers. I will buy only after there is a clear breakout above this double top with a follow through. I'm more likely looking to sell somewhere here. This is a trading range and we are near the high of the trading range. This is the sell zone. Bar 28 doji. Weak sell signal buyer. High probability is to wait for a Beva closing near its low to sell, which we did get on bar 29. Beva closing near the low, reasonable short here. We have a double top here. We have a double top pullback. This is also low to short. This doji with bar 25 high. So this is a reasonable short, but short only for a swing, only for a scalp. Sorry. After such a strong rally up, any sell off here will only be for a scalp. This is a trading range, so we might break below support before we find buyers. So this is a support right now. So we might break below the bar 24 low before we find buyers, which we did on bar 34. Bar 34 is also a wedge bull flag with bar 26 low, bar 32, and now bar 34. It is also a low double bottom with bar 24. And since it is a trading range, you can buy on limit orders below the prior swings, or you can buy above bull bars closing near the highs. This is a bull bar closing near its high. However, this is too big of a bar for me to buy near the high of a trading range. You could buy above bar 34, low probability because this is a bad buy signal bar, but you could still buy for a possible scalp long. If you did buy, now is the time to exit your longs after this bull bar. More likely sellers somewhere near the high of this trading range. Look at bar 37 here. Strong sell signal bar. There's one interesting thing happening. Yes, we are into a trading range right now. We broke below support. We found buyers and reversed up. We broke above resistance. We found sellers and reversed down. However, in this entire trading range, we have been making lower highs. Look at this bar high. Look at this bar high. Look at this high. And look at this high. And we also made a lower low, which makes me think, yes, this lower highs are minor, but this is a sign of bear strength. It makes me think that the market might soon have a possible bear breakout below this before it finds buyers. Also, let me take you to the daily chart for once. Like how I discussed on open, like how I discussed on the start of the video, this bull trend bar was more likely going to be an exhaustive buy climax. And to be an exhaustive buy climax, the first target for the bears should be the close of this gap, this high here. The high of this bar is 24,589. Right here, the gap high, the breakout point. So right now at bar 37, the market has been making lower highs all day long. And The minimum target for the bears after an exhaustive buy climax should be the close of the gap. The second target would be the low of the buy climax, which is all the way to the previous low. The first target is the close of the gap. And with a strong sell signal by here and with lower lows and lower highs, this was a reasonable swing shot for a possible sell off all the way to the breakout point here. Can we have a strong bear trend day? It was very less likely after a trading range open here. Usually, at best, we will get a trending trading range day or a big trading range day. Very less likely we will sell off for a strong bear trend here. So right now, because of this low lows, I'm not looking to buy unless we fall somewhere near the breakout point here, 24,589. Or if we start making higher highs and higher lows, I will change my mind. But right now, only look to sell, only stay bearish. And look at the sell off here. We sold off all the way to the breakout point until bar 52 before we found buyers. Now that you have understood this point, okay, let me say. So we have a sharp sell off here, a tight bear channel going all the way to the breakout point low before it finds buyers. Like I said, because of all the trading range price action on the open, this was less likely to be a strong bear trend day. So it was possibly going to find buyers somewhere near the breakout point and convert the day into a trending trading range day. Also, if you look at the sell off here, if I have a bear breakout bar here, look at the follow through, doji bar. Bear bar here, look at the follow through, bull bar. Bear breakout bar, look at the follow through, weak follow through here, and then a reversal up here. Yes, it is a tight bear channel, but where are big consecutive bear bars closing near the lows? The bears lack that, and the bulls are willing to buy after the close of the gap here, below 24,589. So there are more likely buyers somewhere in this area. Also, since the sell-off is weak, the sellers will more likely look to sell on a pullback rather than sell low. So buyers here, sellers above, makes me think that the lower trading range is more likely than a strong bear trend day. Also, since we did have a breakout bar here, it is possible we might fall for a measure move down. Based on the bar 34 low, we did break below that, and if the market continues to go below that, we might fall for a measure move based on this high, which is 24,567, which we did go there. And the market, in fact, towards the end of the day, fell even lower. So it is possible we might have fallen based on the height of bar 22. And look at that. We fell for an exact measure move after this breakout here, all the way till here. And we entered a very tight trading range, a lower trending trading range there. So after this sell-off, you should not buy until we get somewhere near the breakout point or until the market makes a higher high. We fell somewhere near the breakout point and we were in a tight trading range. This more likely looks like a bear leg in a trading range, so you could look to buy. Wait for a strong buy signal bar, which we did get on bar 58. This was a good strong buy signal bar, reasonable to buy above this high. The market is in a weak bear channel here and a possible tight trading range. So you could buy above the bar 58 high for a possible scalp. Bar 59 was a good follow through for the bulls. However, we failed to go above the bear channel start here and we instead broke below. The bears needed one more bear bar here to convert the day into a strong bear trend day and fall for another possible measure move down, turn this entire sell off here into even a stronger sell off. However, look at the follow through. We have a wedge bottom. We broke below the wedge bottom here and the bears failed to get a follow through. Had we gotten one more follow through after bar 61, I would have started selling the closes for a possible sell off all the way to the previous day low. However, we failed to do that. We have a bull reversal bar here And we have another failed bear breakout here and a reversal up here. Reasonable to buy here for a possible test of the bear channel start here. Also, whenever there is a trending trading range day, the market usually tests the low of the upper trading range, which is the bar 16 low, which we did on bar 67 here. So reasonable buy above bar 62 or above bar 58 for a rally at a minimum below the bar 16 low. However, here now we have a wedge bear flag right near EMA, a lower at double top with bar 47 high, a weak sell signal bar, and if you look at all the bars to the left, this is clearly a trading range. So you could sell here, but only for a scalp and not for a swing. And it was also late into the day, so this should probably be the last trade of your day. We did get a big bear bar here, but this bar was closing near the low of all these bars. It was more likely going to find buyers, and the market just went sideways for the rest of the day. So an interesting day today. The market had a strong major bear surprise on open, a strong sell the close bear trend. However, after this deep pullback on bar 5, a trading range day or a weak bear channel was more likely. We did get a weak bear channel. We had a midday strong bear breakout, and we fell for a measure move down based on this height, the bar 22 high and the bar 34 low, and we formed a lower trading range here. A lot of work to do today. The market was not as easy as it was yesterday, but reasonable swings, reasonable stop order trades. We entered a limit order market here, but until midday we had big swings. Difficult to hold short in this entire sell-off here because of the weak follow-throughs and reversals. But if you did understand the higher picture, if you did see the higher time frame, if you knew that the market will first approach this breakout point before it finds buyers, it would have been easy to hold short all the way till 24,589. So let me get rid of all this now and let us understand what we expect for tomorrow. So what do I expect tomorrow? If you look at the daily chart, we have a higher double top with a bear channel start and a strong sell signal buyer. Also, after an exhaustive buy climax, the market usually falls for two legs down. We have a buy climax here. The first target for the bears at minimum was the close of this gap, and they achieved it today. The next target for the bears should be the low of this buy climax. The market usually will fall for two legs down, and at minimum should approach below the low of this buy climax before it finds buyers. There will more likely be buyers somewhere near the buy climax low. And until then, I do not expect any buying. So if we do open flat and break below the previous day low, if we do break below the 24,548, we might find a selling until the buy climax low. If we do open gap up, as long as we are below this low, as long as we do not break above this major lower high here, I do not expect a strong bull trend here. So if we do open flat and go up, or if we do open gap up, I am finding selling somewhere in this zone for a possible double top with this high and a sell off all the way down to the buy climax low. What if we open a big gap down below the buy climax low, or if we do open somewhere here or here and we start breaking down below the buy climax low strongly, then we might fall all the way to the daily EMA, which is 24,200. So to keep it simple, I'm expecting follow through selling tomorrow. Very less likely we are going to get a very strong bull trend day tomorrow. If we do open gap up, we are going to find sellers somewhere in this area. If we do open flat or if we do open gap down and we break below the previous low, I'm finding sell off all the way to the buy climax low before we find buyers. And if we do continue the sell off below the buy climax low with strong bear bars closing near the lows, we might find a sell-off all the way to the daily EMA, which is 24,200. So yeah, that's it for today. Thanks everyone for watching and best of luck for tomorrow.